Aly-Khan, let's start with the shilling.
Morning.
Morning to you. What do you make of the shilling hitting a new record low this morning?
Well, I think, we've got global sentiment weighing quite heavily. I personally think the shilling, might well have done most of its downdraft this year. It looks very oversold. I think we got improving rains. The central bank, I think people were looking for the central bank to intervene again. I think they probably will come in and intervene and sell some dollars here to keep the shilling below 95.50. And I think they got enough in their toolbox, in their armory, to manage the exchange rate around here, notwithstanding what happens with the dollar, which I think is going to continue rallying sharply globally.
We've seen a report from Renaissance Capital saying that the shilling could hit 100 as a result of the Eurozone crisis. But of course, you seem to be a little bit more optimistic that the central bank now has the shilling slide under control. And we've seen it come to the market, injecting dollars in order to be more aggressive there. So you're optimistic that we might not hit 100, according to Renaissance Capital.
Well, the shilling is down about 18%. It's probably the second or third worst performer in the world against the dollar. It's fallen a great deal already. And I tend to think that a lot of the fall was related to the spike in food and fuel prices. Were very dependent on the rains. The rains were very poor in the first half, but they've considerably improved. I think there's much more coordination amongst our policymakers than there was all year. And I think the wild card is the acceleration of the hard currency disbursements from the IMF facility, which the president requested last week. And I think taken in toto, this is not the no-brainer trade it was all year.
Yeah, they have been more coordinated in their communication with investors, which is good news, of course. Let's turn to the equity market. Kenyan Airways fell back by 3.2%, but this is before it announced that it's planning to double its authorized share capital to 10 billion shillings, and that's around $104 million. Of course, this rights issue is expected in around November. How do you expect the share to trade on the back of that clarity on that news?
Well, we've been in this range of about 29 to 47 all year. We've been hugging around these lows of 29 and 30 for quite some time. I think we're going to hold the line here. It's on a P of about less than 4. I think it's a good, strong growth story. I admit our equity market is weak. It's a big cash call coming in November. But on balance, I think, there is a strong case to be getting involved in this stock if you can at sub 30 levels. And I think it should be supported from here. It looks very good value to me, actually.
Let's turn to the agricultural sector. Most of the stocks are stable yesterday, but Rare Vipingo, one of the outperformers, rallying by 3.6%. That's on the back of news that Kenyan Shilling farming is getting a boost there from investors, a 20 billion shilling investment. What do you make of an investment like Rare Vipingo and investing in an agricultural sector like Shilling?
Well, let's start off with there are a number of counters here. There are about 6 or 7 rares in Sisal. There are lots of tea companies and coffee companies. And essentially, I think the soft commodity price curve has inflected higher and is going to continue at this new normal trend, whether it's tea prices, coffee prices, or Sisal prices, which are at record highs. On a price earnings basis, the majority of these companies are trading on a PE of less than 5. In the case of Rare Vipingo, they made more money in the first half than they made in any full year for the last 5 years. So fundamentally, I like these businesses. You've got to factor in drought and production. But overall, I think we've entered a new normal in soft commodity prices. I find that attractive. More interesting to me is the breakup value of these companies. They hold their land costs at historical purchase prices. And when you go and look at the net asset value, in many instances, you're looking at a net asset value which is a multiple of 10 times more than the share price is trading at. So you've got two kickers, and depends upon which you find more exciting. But essentially, there's a lot of optionality in these share prices, and I see the move higher, and I think Sassini and Rare, the recent news is going to be the catalyst for a substantial re-rating. And this asset class will probably be the best performing part of the Nairobi Stock Exchange in 2011.
And Sassini also coming out saying that it's going to take advantage now of the land that it sits on and turning that into real estate. So this perhaps setting the tone for other agricultural stocks to do the same.
They all have to do it. I mean, essentially, you're in the business of shareholder value creation. Sassini Tea and Coffee, the market cap is 3 billion shillings. The value of this land conversion in Ruiru alone, which is 1,000 acres, is the value of the land is 20 billion shillings. And you're talking about a 700% uplift. You've either got to be incredibly wealthy and not interested in your own share portfolio if you're not going to look to increase value. And I think Mr. Merali has essentially laid out a roadmap, and I think investors will continue to warm to it. Cecily is up about 37% in 1 month. The catalyst has been this conversion report.
Aly-Khan, in 10 seconds, your stock pick for the day.
Rare Vipingo and Sassini.
Great. Thanks very much for your time this morning.
Thank you.